In a significant step towards Atmanirbhar Bharat, Central Board of Indirect Taxes and Customs has reduced the compliances required under the Customs Import of Goods at Concessional Rate of Duty IGCRS Rules 2022 and introduced end-to-end automation of the procedure involved. Towards this end, the online portal was launched on IceGate. Importer desirous of availing exemptions linked to these rules have registered on the same and are successfully availing various benefits that it has to offer. The above rules provide for procedural safeguards to ensure that the goods imported at concessional rate of duty subject to an end-use condition are used for the purpose specified in the exemption notification. Well, based on the industry feedback, the procedures were simplified and made paperless and contactless with end-to-end automation. The changes brought will be summarized by our learned Principal Commissioner, Sir, in his presentation. May I now call upon the dais, Shri S.K. Rahman, Sir, Principal Commissioner, Delhi Customs Preventive, for a presentation on the IGCRS rules and EOUs. Sir.
Good afternoon to all of you. I will give you a brief introduction about IGCRS. The taxpayers who are here, importers, exporters, and EOUs, you have been using this. But before we start the panel discussion, the basic portion of that, I thought I will just introduce to you so that all of us are on the same page and it becomes easier for you to understand when the panelists start discussing this. We have from board office, policymakers, we have system side officers who will be telling you about systems related matters, plus we have implementation side also. So I thought I'll just give you a brief presentation on this. I'm not getting into too much of details, but just to refresh your memories. If you see this import of goods under concessional rate of duty has come after 2017, because earlier we used to handle that. We, in the sense that Central Excise and Service Tax Department used to take end-use bond and we used to supervise the implementation of that. Post GST implementation from 1st July 2017, the import of goods at concessional rate rules 2017 have come into picture and we have been implementing them very smoothly by the CGST officers, by the Delhi Customs jurisdictional officers. Like you have a jurisdictional CGST officer, we have jurisdictional customs officers all over India. The rules after they have come, they have been modified. Major modification I'm saying is from 1st February 2021. In fact, their scope has been enlarged. They have become more trade friendly and some minor corrections have been made in the rules. The next major step that has happened is again when it is automated. Earlier, we used to give the intimations manually. We used to file a quarterly statement about consumption of these raw materials and components. Then the same thing has been automated by board circular from mid-March, even though circular is from 27th February 2022, the systems has been put in place and therein we have started what is called automation. The importers who want to avail this facility will have to go one-time registration by filing IGCR1 and take INN. It's an identification number, and the bond that they will be submitting, bond is also registered online. Now, the great advantage of this is that, please understand, there's a big trade facilitation measure that you don't have to physically visit. Two, you can use this INN and bond number for import anywhere in India. Even though your registered office is located in Delhi, NCR, NCT of Delhi and Haryana state, you can import at Chennai, Naushav, anywhere, you can quote the same number. Then, major modification has again come from 10 September 2022, wherein they have not only brought the manufacturers, now they have brought in the traders also. They said that specified end use, if it's meant for specified end use, that is also covered under IGCR 2022. Now it has been renamed as IGCR 2017 to IGCRS 2022. Same thing I've just quoted here, various circulars and various details I mentioned here, wherein I have been saying that this process, we have given a lot of clarifications, lot of amendments have been added, lot of changes have been done. Please understand the sign of these changes is that this government has been particularly listening to the trade voice. Any concern that is expressed by you, immediately they are reflected onto the modification in the rules, modification into the forms. This is something which is been committed by our government, I mean, by Honorable Prime Minister, that less, government and more governance. We have been listening to the changes, and whatever the changes that are required have been done. In fact, comprehensive circular has been given, and not only comprehensive circular, we have given automation circular. We have also given what is called now the specified end use. What are the fields that are covered? The major clarification that have been issued are also covered out here. The clarification that they have issued is that not only for the manufacturers, for the specified end use, if you want to import certain raw materials and goods, you can do that. I'm quickly running through because panel discussion would be more beneficial to you. Here, I would also like to say that this particular expansion that has happened from 10 September is not only for the specified end use, it has also happened for the import of gold by nominated banks. It is also happened for the UAE, Indo-UAE trade agreement. So this is incorporates both of them. In fact, you may be aware for IGCRS 2022, not only 50/2017 major notification, there are 5 more sets of notification that are also covered. Now with this budget, the scope has been expanded to some more serial numbers where there is a specified end use that have been mentioned. What you have to do is whenever you import specified raw materials or components as mentioned in these notifications, that is 50/2017 major notification, and allied another around 5 to 6 notifications, the raw materials as specified, please be careful about the tariff heading that is mentioned there in the notification and the raw materials. Only those goods only you require to import. Those are the specified raw materials and components. So utilization of these goods also is meant for manufacture into a specified output, specified finished good. That is also mentioned in the notification. Our experience, Delhi Custom Preventive Commissioner experience for the last, I can say at least 1.5 years, is that some of the taxpayers are probably committing some mistake on this. They are not carefully noticing whether this particular raw material component covered, because in this world of automation, in this world of self-assessment, you may knowingly or unknowingly may do a mistake, which may result in some demand of duty. So that stage we do not want to expect. Even if it comes to that stage, nothing wrong. Please come voluntarily, come forward. Our EPCs are there to help you. If any additional duty has to be paid, which you thought you are eligible, you can voluntarily declare, pay the differential duty along with interest and 15% penalty, and we can consider the proceedings under 28(6). I've also covered few important definition of specified end use, because I remember before adding this particular provision, we ourselves have made cases 2-3 against some big importers. We said, you are supposed to consume this, you cannot give it to another person to consume this. On this very point, because notifications require strict interpretation, 2-3 cases have been made. We are very, very thankful to the vision of the board that our government has modified it, even expanded specified end use into this. The details are given here about what kind of specified end use. You are a manufacturer, you are giving commitment to us, you are giving an undertaking to us that you will transfer these goods to or sell these goods to a specified end user. He will consume that into manufacture, and you are liable to us because you have given a bond to us. All these details are there. I request, because some of the people who are attending on behalf of the industry and trade might not have read, nothing wrong, just have a look at it. Please do not completely depend upon your chartered accountant or your consultant or your manager level. One time, these laws are very simply drafted, unless British time. They are simply one time reading will do for you. You get a fair understanding of that. Because as an industrialist, as a owner, as a MD of your company, it is good that you should know what is eligible, what is not eligible. I would like to also show you the format that has been amended, IGCR1 format, that is required by any person in India, any person, whoever is importing anywhere for a particular financial year, it is valid. You register for one time, INN number you get, and in this modification have been done from what was the IGCR1 that was formed earlier, especially by adding notification serial number and other details. This will be beneficial to you if you carefully read the format, fill it up online, and then get a INN number. The part B of the format also covers the details of the bond and BG to be given. Please understand conceptually that the bond you are giving, let's say for 1 crore, supported with, let's say, BG for 20 lakhs, as and when you import raw materials components, the bond amount is automatically debited. Please do not forget that BG amount also keep getting debited. The BG that you are given proportionality also gets debited into this. If you want to add up to that BG amount or bond, you can always top it up by adding up. Most important crucial portion of this is filing of your monthly return. Earlier it used to be quarterly return, used to be manually given. Now it is called IGCR3. Right from mid-March 2022, you are supposed to file what is called IGCR3. If you are an income tax payer, you fill up your form, CA may help you. But if you are a taxpayer who are utilizing IGCR, my sincere advice, humble advice to you is that, humble request to you is that, please have a look at it, your form. This form is very, very simply designed, thanks to board office, thanks to policy wing, thanks to DG system, that the way they have designed this format. Simple reading of form will help you out. If you want me to put it in simple terms and make you understand, it asks you about what are the raw materials and components that you are importing, how much you are imported with respect to particular bill of entry. That bill of entry, that serial number is automatically populated into here. Then out of those raw materials, if how much is consumed into manufacture of finished goods. After manufacture of finished goods, those finished goods that you are after clearing, then only you mention that so and so has been consumed. If it is in stock with you, please do mention that it is in stock with you. So the equation is very simple. What you have imported minus what you have consumed plus what is available with you. It's as simple form as that you have to mention. Of course, subcategories would be there if you are giving it to specified end user. I will request one time, please have a look at the format and see. Now, another great trade facilitation measure that our CBSA has introduced is that, as you are aware, you are utilizing your bond, you are utilizing supported with a BG. As and when you consume this raw materials to manufacture finished goods, after the clearing, you are mentioning that the bond amount is recredited to you. Proportionate BG is also. Now, suppose you ran short of crediting because you get a window of 6 months to consume them. Within 6 months, either you have to consume them for manufacture of finished goods, or you can clear as such to the field by payment of duties, or you can even re-export it back if you do not require them. Either of these three will have to be, or you can send for job work, or you can send it to specified end user to ensure saying that he consumes within 6 months. By any chance, if your bond is exhausted, let's say you are a brisk manufacturer, brisk importer, then you are running short of the bond amount in between the month, because once you file your GSTR3, then only the recredit happens. In between the month, it's a very, very great vision that board has seen that in between the month you want, you can file IGCR3A. IGCR3A is something which says saying that in between the month itself, you are saying that, look, I have consumed certain raw materials which I have imported, let's say 5 months before, 3 months before, I have cleared my finished goods, and this is the credit I want to have it. So when you file this IGCR3, the officers will permit it to recredit the entire amount, whatever is the proportion amount, to your bond, so that you have sufficient liquidity and bond amount for further import of the raw materials and components. In the middle of the month, this has been added. Can you imagine to what extent the government is coming forward? Is it a time when government is taking 2 steps forward to you? I request you also come 2 steps forward to shake hand with the government, take advantage of this provision. Here, when you file your IGCR3 at the month end, this gets auto-populated into it, and it will take care about what is available with that. So that IGCR3 that you file in between the month gets changed into it. Here, after finishing about domestic industry people, I also would like to appeal to the EOE people, if you are here, that for the EOEs 52/2003 notification is there. You give a bond, you import. These are the raw materials that you have imported with a promise that you manufacture finished goods, and these finished goods are exported back. Am I correct? 100% EU means you are supposed to re-export them back. But there is also a provision that you need not export the finished goods, you can even clear it domestic tariff. Now, when you are clearing in domestic tariff, you are paying not only on the finished good, the GST rate applicable, you are also paying back, reversing back, or pay back the BCD component that you are taking the benefit, only the BCD. If the finished good is accessible or GST payable. Suppose the finished good is exempted from GST or accessible, then you have to reverse or pay back the BCD and the IGST portion of the benefit that you're taking. This is a normal draft. But now here, if you see, the class 2 of the 52/03 also says that you shall follow the rule 5 of IGCR 2017, which is now to be read as IGCRS 2022. What does the rule 5 say? Rule 5 says that you will have to intimate about the raw materials coming, and you will have to intimate about the consumption of this. In fact, EOS, you are aware that this is a link between EOS and the domestic unit, because you are clearing them into some of the goods into domestic market. This particularly EOUs, they file a monthly statement under a board circular in which you do mention that this is the raw materials are imported, this is the raw materials are consumed, and these are the finished goods. Out of finished goods, so many have exported, so many have cleared in the domestic. You mention them. You don't have to file IGCR 3, but you have to follow Rule 5 of IGCRS 2022. Please do remember this. We at the implementation side have been interacting with you every Saturday. I believe, I hope all of you know. Yes or no? Every Saturday we are having a meeting with you. Every Saturday, many of you don't come, but still we have patience to come to you. My EPC officers are here, all the 5 officers, and myself, every Saturday I'm there online with you at 11 o'clock. We have WhatsApp group. For those people from board who would like to mention, please do mention it to board officers and other commissioners in the country also. We have our excellent assistant commissioners here, of each of them. They have a WhatsApp group within the EPC Rohtak Cash System WhatsApp group, 24/7. Any doubt that they are raising, immediately our officers are able to answer them. Every Saturday, I mean, they started from 1st March 2022. From the time our Honorable FM has said that Saturdays you should have a trade interaction meeting. We have given a break in April and May, but we reassumed it and continued because the rules are changing so fast, or the provisions are being added so fast that we didn't want any violation by you. And we never penalize them. Till now, we never put any penalty upon you. We always said that beyond 6 months is over by these items, you will have to pay duty. We invited you for 28/6 and we have done. So here I am saying that the changes that are meant for EOS, because we have seen many people EOS are not having clarity, are not able to understand this. The very purpose of this trade interaction meeting is to educate you, is to empower you. See, as a law enforcer, we are trade facilitator also. We want to create an environment saying that where you understand and what you will implement them at safely at your stage, so that there is no error that happens, there is no interest and penalty that you require to pay. These are the various provisions which are specifically mentioned about Rule 5 to be followed by EOS. My dear taxpayers from EOS, please do make a note of this and ensure saying that they are done. I have mentioned few points for discussion. I do not want to get through because my very experienced officers are going to have panel discussions here, but there are certain issues that are coming up. Board office is aware, and we have raised time and again with the systems directorate people also. She is here and she is aware of these issues. And these issues are sometimes are bothering, especially about EOUs. Had it been complete EOUs and the DTA into this also is a different matter, but there are certain issues that are still there. Because believe me, the journey is never complete. Believe me, the learning is never complete. We are learning, you are learning, we are joining hands together and do. Without taking much of your time, I would like to say just 1 or 2 sentences, because I feel that India, as you have seen post-COVID, is recovered faster than many economies, which you believe. I believe, I hope you also see that. Because who recovered? It's not the department, it is you who have recovered. It is the resilience of the industry that you have shown that you have come back. And believe me, 2023-24 are going to be crucial years for India. Very, very crucial years. If you want to have Atmanirbhar, if you want to get into top 5 economies of the country, it is you who will have to contribute and do. We are only creating an environment. We are only giving this kind of seminars, webinars, trade interaction meetings, only to help you, only to handhold you. Believe me, if you come forward and join us, many of our officers were hesitant, but we have made that very friendly to you. We are one of the stakeholders. So take advantage of this. Never ever department has come, at least in my experience, I'm telling to so far to bend backwards to accommodate you. If you take advantage, join us, I'm very sure India will become economic superpower as visualized by many in the country. And I also caution you that if these 2-3 years, if we make it, we'll be there. Either you make it or break it. There's no in between them. If we work hard together, both from department and trade, we can be into the top superpowers, economic superpowers of the world. If we miss it, believe me, in under 20 years, we will never be. So kindly I request all of you to cooperate with the department, understand if there is any omission of error that has happened in a right spirit. I call them, Anant, you may believe, I call to my chamber, many of the taxpayers, I explain to them as a principal commissioner level, my own joint commissioner join them in convincing them, saying that, look, this has happened. You people run to consultants, you ask them to do something. The consultants are good, I'm not saying no, but they always, they always, some of them may give you comfort of saying that not to pay. Believe me, better to pay, get rid of this rather than, to dispute with us. We never want any disputes to continue. We always want a good and friendly relationship with you. So with those few words of trade facilitation, I take leave here. I call my experts to come and discuss with you. I'm available here. I will also supplement if any question answers are there. I would like to thank each and every person who has come here for giving taking out his professional and personal time to come here. I would like to thank officials from board and DZ systems who have come here. Thank you and take advantage of this. Thank you once again.
May I now invite upon stage Shri Bimal Jain, Chairman, PhD CCI, for his presentation on the difficulties and challenges in the IGCR and by the EOUs. Sir.
At the outset, let me greet and thank all officials from CBIC, DigiSystem, Policy Bing, from trade and industry, and tax professional. Rahman sir, rest assured, we all are sitting here to make it. Am I right in saying so? We are all here. And don't say that we are not the partner in nation building and growth. We are. And as a tax professional, let me say, because I'm also a tax professional, we never advise any client for the tax evasion. Of course, for interpretation, we may have a fight. You may have your own interpretation, and I have my own interpretation. And I will touch base those points because 15 minutes slotted to me for challenges in IGCRS. I will show those pointers to you. Improvised version in IGCRS, but still there are certain points which is still requires clarity. But before I touch base IGCRS, let me first celebrate this Customs Act 1962, 60 years. If you look at this table, then basically we started from 1786. First time Board of Revenue was established at Calcutta. And 1962 Custom Act was made 60 years, a big celebration for all of us together. Custom Act is a multi-purpose act regulating import and export of goods, levy and collection of duty, penalties for certain specified offenses, and most importantly, protecting domestic industry from dumping. So high regards for that. So I'm not running into what we have seen last 60 years, but definitely appreciation those who drafted Custom Act 1962. Appreciation to each of the officer who legislated and executed. So they deserve a big round of appreciation from all of us together. In a process, lot of improvement, 24/7 custom clearance, can we think of? 24/7 adoption of DSC, digital signature. We got faceless assessment. Faceless is a good argument, but there would be some of the aggrieved importer that they are not being given opportunity to make out their point. And of course, RMS risk management system, appreciated. If you look at some of the important aspect which is being taken up by Honorable Finance Minister, decriminalization, and which is being discussed, certain specified offenses. And these are good steps to provide ease of business, trade facilitation, 100%. But some of the point which I would like to draw here, that we are on custom server also, and there is DGFT server. And there are a lot many points which comes to my mind where we need integration. And what are those pointers? I can start with that shipping bill, which is being processed through custom server, it should go automatic to DGFT server and bank, because sometimes if data is not matching, export benefit are being denied. Come to export incentive license, which is issued by DGFT, need to be registered with custom department. So the taxpayer has to go from one pillar to another pillar. Why can't it be integrated? And these are constructive suggestions on the eve of 60 years of Customs Act 1962. Cancellation of bond and annuity, which is there with the custom department under EPCG. We have to get EODC certificate, export obligation discharge certificate from DGFT, then we have to submit to the custom authority. Why can't we include a particular clause? I'm giving food for thought. When we are thinking so much of trade facilitation, these can be integrated. And even for the self-sealing, standardization of documentation. Why jurisdictional authority would be demanding different kind and different set of documentation? Nevertheless, I'm going to highlight 3 important pointers here, sir. Classification is the issue which you will find traveling to Supreme Court. Even in custom, we have seen classification. Now, when I'm comparing with GST, last 5 years, under GST goods rate notification, there is specific mention explanation 3 and 4 in goods rate notification. They're going to follow what is the tariff heading, tariff item, subheading, chapter note, section note of first schedule of Custom Tariff Act for all interpretation of GST goods rate notification. Sir, I'm telling you today as on date, when I'm importer, I'm giving you example. BCD applied as if I'm importing parts and component. But for IGST rate notification, the same benefit has not been given and it is being considered as a residue entry. I'm only saying if it is being stated in the goods rate notification, either be CGST or SGST or IGST, they're going to follow the tariff heading, subheading, section note, chapter note, explanatory note of first schedule of Custom Tariff Act. Lot of litigation, sir. I know that within GST from 1st April 2021, there's a mention 4-digit HSN code if aggregate turnover is less than 5 crore. B2B. More than 5 crore, 6-digit, but for import and export, it is 8-digit. But problem is that when first schedule of Custom Tariff Act, which is being considered in goods rate notification, why it is not being considered religiously, classification. Coming to the second point, sir, valuation. Again, there are a lot many issues on valuation when you look at the custom import. But one thing which I'm highlighting from custom and income tax, I'm a related party. I'm importing goods. Custom department will always look at to increase the price and to get maximum custom duty. And what income tax authority will do, related party transfer pricing, he will try to reduce the price, increase the profitability and get more income tax. Transfer pricing should be same for both the department, be it custom department, be it income tax department. And this particular representation, at least I can vouch for last 3 years, I'm representing in pre-budget memorandum, related party transaction. Coming to the third component, we all are struggling with imbalance of trade. Import is higher, export is not improving. And another challenge is definition of export of goods versus export of services. Export of goods, settled one, goods taken from India to a place outside India. But for services, we are having different interpretation. I am serving to a foreign client, research and development. Take an example. I'm doing research and development in India. A foreign customer reaching to me for research and development. I'm undertaking research and development for him and giving the report to him. It is being used by foreign client only. I paid in convertible foreign exchange, but it is not export of services. place of supply. It is used by foreign client, convertible foreign exchange coming into the country, but still it is not being considered export of services, intermediary, sales promotion. So we have to find out wage and means. We have to find out wage and means where we can create synergy and improve export because we are getting convertible foreign exchange in the country. So these are the three broad points I thought I should draw your attention. Coming to the alternative of import. We got SEZ, we got EOU. Sometimes we are left out with the stock, finished stock, and we are not being able to export for either or region. And this is the budget proposal which I given in pre-budget memorandum, that if concessional, which we are referring to, we can also apply on removal of finished goods for the home consumption. Advantage one, being concessional, full duty will not come. To the extent of value addition, don't charge. Only on raw material component, whatever advantage I got, charge that one. On value addition, you should not charge. And with this process, whatever goods are left out with SEZ unit or EOU will go to the domestic market, alternative to import. And next, convertible foreign exchange is not going out of the country. Maybe we can think on those lines on a wiser note. And this is suggestion once again. Coming to IGCRS, undoubtedly, and let me compliment you and your whole team, including CBIC and government. The way improvised version is there in new avatar. I must compliment in new avatar. This import of goods at concessional rate of duty for specified use. Just think of, earlier there was a restriction that it is only for the importer who has to use for a specified purpose. But now trading is permissible. Services are permissible. And prior intimation, you have to generate IGCR identification number. And continuity bond with surety and security, you have to only fill up your IIN with the continuity bond number at the time of import and at any port. These are all automation. You have given the facility of job work, inter-unit transfer, and even trading purpose to the last party for the specified usage. Real advantage. And automation on system, IGCR1, which is prior intimation, IGCR2 for non-receipt and short receipt of raw material imported, IGCR3, which is monthly, earlier it was quarterly. It is monthly. And then IGCR3A, in between, you can always fill up and get your bond account recredited. Though amendment to the bond is permissible. So these are the basic advantages which I have drawn down, but now coming to the challenges. And I should be taken as a constructive feedback which I'm offering to you on IGCRS. First point, sir, applicability. IGCRS, it is being stated as per Rule 2, this notification provides for observance of these rules, semicolon, and there's no and or. And then they're saying in clause B, importer intends to avail the benefit. Yeah, importer intends to avail the benefit of any notification. And such benefit is dependent upon use of goods imported being covered by that notification for the manufacture of any commodity. So manufacture, provision of output service, and being put to a specified end use, three broad parameters. Now the question which is coming out, whether this clause A and clause B applicable simultaneously or in isolation. Why I'm raising this concern? For the reason which is cited in the next slide. Rule 3, sub-rule M, is talking about definition of specified end use. And circular which is being issued on 10th of September 2022, it is suggesting that any exemption notification under section 25 subsection 1, that may be 50/2017, that may be notification of advance authorization, that may be notification for project import, that may be notification for goods imported for repair, reconditioning. These notifications are having built-in condition, but there's nothing written observance of IGCRS rules. Now, by reading this, the problem which trade is facing, they may have imported under 50/2017 having some restriction end use. Are they supposed to really observe IGCRS rules also? This is the point which is coming out. Sir, this is the point which is debated at length. I'm just throwing these pointers for clarity today. So if I'm adhering to the condition of that particular notification and there's nothing written, observance of IGCRS rule, then I need not require to. I should only adhere to such conditions of that exemption notification. This need clarity. One point. Coming to the second point, sir, job work and inter-unit transfer. Well appreciated. This new IGCRS rules 2022 is permitting job work and inter-unit transfer. Well said. And disclosures need to be made in monthly return. Goods can be kept at the job worker premises. But the rule is saying follow the procedure under GST law for supply of goods under an invoice. I'm saying that when I'm sending to my job worker, I never raise an invoice. I raise delivery challan. And at ground, when we are dealing with the officer, it should not be debated. They must understand the meaning of this invoice is mean to delivery challan, because when I'm sending to my job worker, I'm not supplying in GST perspective. Subsequently, job worker has to maintain all accounts, produce the details whenever required by jurisdictional custom officer, and send the processed goods to the importer or to another job worker within a period of 6 months. Now, here are some of the pointers, sir. IGCRS talking about 6 months, but GST law talking about 1 year for input and 3 years for capital goods. So we are also trying to understand when this rule got drafted and they're saying we need to follow the GST provision, why this period was not considered. Maybe you may have some, backup in your mind for what region this was not considered. Otherwise, it is stated as per GST law, 6 months. Next, from my job worker premises, can I really export to my ultimate customer outside India? Provision is not saying so. It is saying it should be coming back to the importer. No, you can always see. I'm just some of the pointer. See, first of all, I should not be considered as a critics today. We are into trade facilitation. Some of the observation I got from trade members, and I'm the party to you. Believe me. And I really appreciate. I can't think of WhatsApp group for the taxpayers, and that Raman sir is running. He is the person, believe me, I'm making this statement today. He is the only person which I've seen in my throughout career. Let me say upfront, he's such a dynamic, always receptive and willing to listen. There may be challenges within the law. If I'm also saying something, I'm saying from the taxpayer side, maybe you can always correct us, and that is how we have to go together. And that is called Sabka Saath, Sabka Vikas. We are celebrating 75th Azadi Ka Amrit Mahotsav, and today auspicious day, DRI day, and 60 years celebration of custom law. What could be? This is the biggest occasion, and whatever pointers I'm making, constructive suggestion, no criticism. Believe me, no criticism. And I will be the first person to come to say that this is what 6 months. You will also agree with me. GST law say 1 year for input and 3 years for capital goods. Okay. Now, when I'm saying 6 months, there is another challenge that we may have imported goods prior to 10 September 2022. And that time, this period was not there. Period was there? It was not there. Period was there 6 months. What about taxpayer? Can you sound it? So now the change provision is 6 months. So are you going to follow the new 6 months criteria for past import? So on cut-off date 10 September, you may have a stock, running stock, which is having a longer time period. Now, do you want to curtail it to the 6 month? Little clarity. And can I export directly from my job worker premises? Even in case of inter-unit transfer, well said, and this is what a good provision, that importer can send to their own unit, no problem. But can they really export from that recipient unit directly instead of taking it back? Because that has got logistic and commercial. Now, having said that, I'm going to next slide. Challenges that security and surety continuity bond equal to differential custom duty. But there's one particular, this representation which I got, which I would like to draw your attention, that Indian Custom EDI system issued an advisory 9/2022 dated 10 June 2022, wherein it is specified that continuity bond is required for an amount equal to assessable value. So this is going in contradiction. So maybe a clarity needed on this particular point. Coming to the next 6 months criteria. The 6 months criteria is little, we are requesting only as a feedback, it can be extended. It should be aligned with the GST law or certain approval mechanism, auto approval mechanism. Like in eBay bill, in GST, when it is expiring, you can put in your details and it gets automatically extended. If that kind of system can be brought under IGCRS. There are another challenge, sir. This IIN, which is given, IGCR identification number is being given. It is pure GST number. So one GST number, one IIN. But there may be a case, I'm having 10 units in the state of Uttar Pradesh, but one GST number. So I would be given only one IIN. Now, all 10 units at different places having different jurisdictional authority importing under IGCRS. For them, it is a challenge. They are saying if at all we need to adhere and comply with the provision IIN-wise, then I should be given 10 separate IIN even under same GST number, which is not the case as on date. And that will help them because they have to give consolidated bank guarantee if one IIN. But with respect to 10 unit, even compliances is getting complicated. Only suggestion, if this can be worked out separately. Coming to the system challenges, sir. I'm not saying this is the general for all of us together, but we are facing, some of the taxpayers are facing this problem. So DG system can comment on whether these problems are there today or not. In case of incomplete data transmission on IGCR common portal, importer not able to correct and amend the said information. Some of the taxpayer in pre-budget memorandum, we have taken the input and they have given this suggestion. That's the reason it is in my compilation. Duty foregone details are incorrectly mapped in some of the cases. If you want, we can take the input from the concerned trade members and provide back to you. Mapping of consumption data not yet considering opening quantity of past import. Jurisdictional authority insisting on a manual submission even though we are on automation. So these are the challenges from system perspective, but 2-3 things which is still coming out, which I have not compiled, but food for thought, that my prior intimation is only demanding data pertaining to job worker. What about inter-unit, recipient unit, or when I'm trading and sending to a customer for specified usage? These data is not required as on date on the system. But maybe over a period of time, when you want to monitor the same, you'd be looking for those information. The last and foremost submission, sir, you said in your opening remarks that you are coming forward today. We are doing program for IGCRS. For EOU, you referred about Rule 5 of IGCRS 2022. Even EOU automation can also be done on IceGate instead of manual. Yes, it is a work in progress. We are working. And over a period of time, it will improve upon. And last and foremost, because we'll start the panel discussion, sir, first, we are equally responsible as you are. And we will work back to back, soldier to soldier with the tax department. PSD CCI is vocal about, we want to really adhere and do the compliances. This program, you have chosen PSD CCI for what region? You really thought PSD CCI very active. And they're doing all these programs. So all the members will agree with me that we really want to see India is prospering, growing, and definitely we will make it. That is for sure, I can tell you. And last and foremost, being PSD CCI, tax department is doing their part, but being tax professional, we are also doing our good part to represent India. And I said offline that tonight I'm visiting Singapore to participate into Exchange Summit. And my presentation going to be e-invoicing in India. They invited me for presenting. They could have invited any government officials, but they have chosen a trade person to tell them how e-invoicing got implemented in India. So I'm going to present India. So I'm back to back with you, soldier to soldier with you. So rest assured, we will do everything possible. We will do everything possible to see India is growing, prospering, and we really want to see India is on top on the world map. With this, thank you very much.